Yes, indeed.
Hey everyone, this is Howie. It is October the 2nd, 2018, and while I know that I had talked in previous videos about September being sort of the reset time when I could get back into trading, unfortunately there was some more business stuff that transpired, and I was forced to sort of do a little more work over the last month or so than I had anticipated. However, I, knock on wood, feel like the end of September was a big promo month where we had to do a bunch of preparation and things, and now I'm sort of back in the game as far as stocks. However, that being said, there is a significant paradigm shift that I'm going to explain um, in this video. So essentially, I pulled up, I was doing a little bit of looking. My plan was sort of for this week to be watching the sort of stock, the big losers of the day. Each day for this week, and then sort of keep my eye on them, and then as they start to pull back from their overextension on the downside, look at buying them up. That's sort of been my mindset for the last year. Just general concept of buying stocks low. Hopefully there'll be some bad news. I've seen it. I don't know the example. It was like 6 months ago. Facebook had a third quarter or second quarter that was only at 4%, and they had projected 4.6%, and the stock went down 12%. And I said to myself, well, that's ridiculous. It's such an overreaction to just a minor hit. So in those situations, I always felt that there was a significantly strong chance that the stock would rebound. So generally speaking, the concept was about halfway up towards where it was uh, previous to the announcement, and then sell at that point. So that's kind of been my mindset, generally speaking. So what I did was I made 2, 4, 6, let's say 8 stock purchases in August. I haven't really done trading since then. They've all been sold off. So um, I thought I'd visit them a couple months later just to hypothetically see sort of what the long-term projections of these stocks were. All these stocks had significant, like they were some of the biggest losers of any particular days after some sort of event or situation. So the first one I'm going to look at is CFP, which I purchased on August the 7th, just to give you an idea. So this is a 3-month chart, so the last basically 60 days. So August the 7th, you can see is in here. So you can see this was a significant loss of this stock. You can see it was 28 down to 27, so $1.50 off this stock in one day. Fairly significant. You can see it from its high of $33. It had moved all the way down to like in the $26 range. Now you can see this huge pull up all the way back to $32. So in this instance, hypothetically, that was a good time to get in on August 7th. You can see the bottom of the pit, $27. Unfortunately, I set my stop loss at 27.20 and got stopped out. So you can see the move all the way was down to 26.98, so about 30 cents stopped out. And my plan was to sell half at 27.20, which would have been here, and then to sell the remainder at 33.94, which would have been 33. What I've got there? No, it never got up to my second stop. It would have gone up to 32.39. But on the long term, you can see it's currently sitting at $23. So this is sort of best case scenario. This is actually a stock that, while I got stopped out of, had I been a little bit more chill on my stop loss, given it a little more room, I probably could have pulled off both of my sell points, or at least the first one, and stopped out at some sort of profit in the few $1,000 range. However, again, I'm looking at these stocks in a long-term growth from the point that I decided to get into where they are now, and you can see I got in at $27.50, and over the last 2 months, we're looking at a loss to $23.22. So if I were still just sitting on the stock long term, I would be almost $6,000 down. My stop stopped me out at about $500 loss. I'd be down $6,000 on the stock. At a $40,000 purchase price, that's what, like 13, 14%. Fairly significant. So moving on, we have IFP, and IFP was actually a winner for me when I purchased it. I purchased it at $20.31, again, August 7th, I believe. So you can see there was a big sell-off at the end of July, all the way down to 1969. I purchased it at $20.31, so right in here, and sold it at $22.49. So you can see $22.49 on this big pull-up. But again, long term, over the 2 months, had I just held on to the stock and not sold it, it's currently trading at $18.78, which would put me at a loss of IFP, a loss of nearly $3,000, again on a $40,000 trade. So again, about 6% loss. So I started thinking to myself, okay, is this really a good strategy for a swing trade, which is typically 2 weeks to a month, maybe a month and a half, something like that. Because even though, in theory, this hit its bottom sort of in this range that I was buying, and I did have some success. Ultimately, it's now trading, significantly lower than what it was. The third stock, APH. Now this is an outlier because this, of course, has had tremendous success. It's a marijuana stock in Canada. And this stock I got in at $10.11 on the same sort of time frame. So back in here. And this is when I was stopped out at $9.74. It got as low as $8.58, so I would have had to have a pretty significantly high stop loss. And you can see it's pushed all the way into the 20s, currently trading at 16. So in this hypothetical, if I was still holding it, I'd have a profit of $26,000 on a $40,000 investment. So a massive, like, I don't know, 60% return or something. However, on the original purchase, and this is where it gets tricky, I had a sell point of $10.58. So I was only looking to move it up about 50 cents and taking about a 30-cent loss on it. So I would never, ever, ever have got that level of profit up to $21 because I would have sold it way before then. So even that's not even a good example of but it is a stock that from the time I bought it is up significantly. So that's sort of what I'm looking at here. VET purchased in August at 43.01. And so August, right in here, sort of this downtrend. So first of all, it pulled all the way down to 39. So I would have had to have a fairly insane stop loss, like low stop loss on it. And you can see from that point, it's not up over the last 2 months at all. It's down about $1. So for VET, I would be down about $571 on, again, about a $40,000 investment. TSGI is another one. This one, you can see this huge sell-off back in August. This is when I got in looking for a pushback, pullback, and nothing. You can see it sort of traded flat for a bunch of days. Pulled up a little bit to 38, but that's way below where I entered. And then has since tailed all the way down to 30 bucks, and now is sitting at 31.47. So again, these rebounds just aren't happening on a longer time frame. In this one, if I still held it, I would be down $9,900. MAXR is the next one to look at. 41.66 is the current trading. I entered this at $47 and got stopped out at MAXR. Got stopped out at 45.67. You can see it's down $5 from that point, or $4 from that point. So back in here is when I entered, somewhere in here. and it sold off all the way down to $38. So I wasn't even close to this bottom pullback. There was no pullback for another, okay, maybe it was fairly recently to that point. August 20th is actually when I entered. Let me get that more accurately. So August 20. So right here I entered. And I would have had to have an insanely low stop loss just to get this rebound, and it would have rebounded just above where I actually entered. So again, not very good. With that one, I would be down about $5,300 if I still held that stock. Next, XGD. There's only this one and one more. $9.90 current price. I entered at $10 exactly, stopped out at $9.92. That's really tight. But if I still owned it, it would be basically break even, a little bit down from where I entered. So I entered somewhere August, near the end of August. So let's say entered in here because I saw the uptrend from this down. I thought, okay, there's the bottom. It's starting to pull up. It pulled up only to 1022 and would have tanked all the way down to 920. So basically break even over the last 2 months, down $340 from my initial purchase price. And the last one is AEM. AEM 45.15 is where it is now. And I entered at 46.70 and was stopped out at 45.29. So again, end of August, somewhere in here, you saw this big sell-off. Looked like it hit the bottom. I came in around here. A tiny bit of a pullback, just to $48, so only $1 something. And then another massive sell-off down to 42, 41. So again, with this stock, I would be down $1,500 or so if I still kept in the stock. So I set those numbers to you, and I'll bring up the actual chart. I called it if I didn't sell anything. You can sort of have a look to give you an idea. The overall net profit or loss over all of these, if I never sold them, would have been minus $180. And huge, chunky losses, $5,000, $6,000, $10,000 losses, and then just one outlier that, again, I would have had to hold on to way past my stop loss, my sell point. So with all that being said, I'm going to think about it. I just am going to think about it. And I started wrapping my head around some concepts. I remember hearing a video story about some very famous investor who had never purchased a stock that was below its highest point in its history. And I started thinking about the concept, and what I'm going to look at over the next week is I'm going to look at stocks that have had positive reviews, so stocks that beat their estimates, stock that had a good quarter result, stock that has some good announcement, and to watch not just the day that happens, because sometimes when there's an announcement or there's news and the stock goes up 5 or 10%, you think, oh shoot, I missed that opportunity. But what I want to look at is the second day after, the third day after, 2 weeks after, a month after they've had a good result, and are these trends continuing? And if they are on a general term, I think I like the idea of shifting to a positive outlook. So I'm going to look at stocks that have had some success, immediate success, and look to get in and sort of ride that train, assuming that it might be a multi-week or multi-month movement in the right direction. So I hope you enjoyed this little, this little situation. I mean, the actual results from this were not great. You can see about 6K down on this. Now, I'll put a caveat that this TSGI should not be 5,000 down. This should be, my stop loss was set at 42. So yeah, it says 35 here, but you can see it's a $6. I'd set this at about $40, and I inputted the wrong thing. I put it on a one triggers, one cancels another order. So because, long story short, I just messed up on how I inputted the stop loss, and it went many thousands of dollars below where my stop loss should have been. This should be a loss of probably $1,000, which still puts me in the whole 2K over my trades, and you can see just one successful trade over the course of 7 or 8. But that being said, yeah, I'm just thinking. So if you're watching this and you want to give me some feedback or ideas or suggestions, you want to banter about it, I'm all ears. And I hope you enjoyed watching this video. This has been Howie. See ya.
Yes, indeed.